Hello and welcome back to Camel Finance. I'm your boy Camel, and today I want to talk about why I believe the stage is set for new all-time highs for Bitcoin. So first of all, I'm going to quick look at the news, and the news is spooking markets at the moment. At least that's what they want to tell you. They're saying that the Fed just spooked markets, and the reason for this is, according to the Fed, it is of paramount importance that they want to get inflation down. So this means that they're going to raise rates, and they're also going to do this in the form of running off the balance sheet. So it says here that they both envision higher rates, and in the former case an aggressive drawdown of the assets the central bank is holding on its balance sheet. So this all sounds very scary, but I think there's a few points to make here. First of all, they say they want to stop inflation, but they don't. Don't get this twisted. Don't get this wrong. They do not want to stop inflation. They have 30 trillion of debt. They cannot stop inflation. The only way to service this debt is to hyperinflate it. They also say they want to achieve this by raising rates, but this isn't really true either. To a large extent, they have missed their opportunity to raise. I've drawn a line at 0 here. This is the US 10-year minus the US 2-year, and you can see they've already missed their chance. Rates are at 0. If they start to raise rates now, I'm not saying that they won't raise rates at all. They could certainly do a couple of token rate raises, and I would kind of expect to see a token raise or two. But if you've been following the news for the past 3, 4, 5 months, they've been saying some ridiculous things. They've been saying in some places it was going to be as many as 8 or even 9 raises this year. There is no shot, in my opinion, there is no shot that they are going to raise rates 8, 9 times this year into a slowing economy. This would just completely destroy the stock markets. This would completely destroy their balance sheet, and they would violate their mandates for their debt to asset ratios. So whilst we can expect to see a raise or two, a token raise or two, or even 3, I think it's more than reasonable to expect that they are going to have to do a dovish U-turn or a pivot on this very hawkish stance that they've got, and then justify somehow printing more money to prop the markets back up. And as for running off their balance sheet, yeah, they can maybe do that for a while, but you know that it's only a matter of time before they start to print again and then have to continue to expand their balance sheet. I'd just like to make an interesting point here. Every dip has its narrative, and so I actually called this pullback a week ago without knowing about the news, without looking at the news. If you've been watching the channel for the past week, you would have seen that I called this all the way back in at the end of March. I said that we might get a little push up, and then I expect this pullback, and I said I don't know how deep this pullback goes, but I said likely we could buy that pullback. So it's just funny that they can say they're spooking the markets, and this may well go, all the way down here. But I absolutely think this is a buyable dip, and I don't think this is. I think this is much more of a mid-cycle shakeout than an actual problem at this moment in time. So with all that said, I'd like you to keep that in the back of your mind whilst we move over to Bitcoin. By looking at Bitcoin's on-chain metrics, we can see that the exchange net position change for Bitcoin across all exchanges is deeply red. And what this means is Bitcoin is being withdrawn from exchanges, likely to be stored in cold storage wallets, and not to be traded with. Now, this is not the sort of action you would expect to see right before a large sell-off in Bitcoin. By taking a look at the Fear and Greed Index, we are by no means close to panic or fear at this stage. We're actually quite neutral, so there's no real reason to expect that we would suffer a large-scale decline imminently from here. Moving on now to the Fed balance sheet. So I think this is where the news is going. It's trying to scare people with when the Fed's increasing its balance sheet, Bitcoin historically does really well, but then at the end of 2017, the Fed actually started to run off its balance sheet, and this actually marked a local top for Bitcoin. But then, interestingly enough, Bitcoin found its bottom right as the Fed started to increase its balance sheet again. An increase in its balance sheet, of course, means printing money out of thin air and buying assets with that freshly printed money. So you can see where the news is going with this. They want us to sort of think that they're going to quickly run off the balance sheet, as it says back here. They're going to be doing whatever they can to an aggressive drawdown of the assets that the central bank is holding on its balance sheet, to try to make everyone scared into thinking that we're going to suffer something like this, and therefore that will mark a local top for Bitcoin again. But I think the point we're trying to make here is that seems quite unlikely. But as we showed earlier, they have already missed their opportunity to do this, and aggressively hiking rates and running off the balance sheet into a slowing economy is only going to cause them more headaches and blow up the stock market. So they really have no choice other than to do a few token rate raises and then turn the printers back on. And if you've watched the prior videos, then you'll know that each time they have to do this, it takes more and more money. It's an exponential inflation. It takes more and more money to keep patching this economy, which is full of holes, and this market, which is full of holes. It takes more and more money to patch these holes each time. And therefore it's perfectly reasonable to expect that we are going to see insane amounts of inflation, which are going to be very crippling for a lot of people, and thus likely be the catalyst which drives Bitcoin up into the six figures. Whilst I'm here, I'd like to point something else out, which I thought was quite interesting. I mentioned earlier on, every dip has its narrative, and show me the charts and I'll tell you the news. Well, if we look at when the actual FOMC meeting is, the 3rd and 4th of May, this is where they're going to, assuming I'm correct, this is where they're going to make a token rate raise or two and also start to pivot to a more dovish stance. This date just so happens to line up with, if I go to the S&P, the US equities here, take this off of log. And I thought that was interesting. That would take us right into about this range, which to me tells me that we could likely see some sort of pullback. I don't know how low, obviously, maybe around here. And then we buy that and we make a run up. And I just thought this was interesting because that would take us to about, let's say here. Just mark that, this blue line. This would be FOMC here. So this sort of seems right in the sort of region that we would get this pullback and a bounce, and then make a high. I don't know if it's a higher high or an equal high or a slightly lower high, then drop into this FOMC low, and then resume this this uptrend. So again, every dip has its narrative, but I really do believe that the Fed is bluffing here, and the market is going to call the Fed's bluff, and this is going to lead to far more inflation and therefore record amounts of asset buying and new all-time highs for the stock market and of course for Bitcoin. So I hope you enjoyed this, guys. I hope you found value here. If you did, please remember to drop a subscribe and a like or a comment on the video. You can follow us on Twitter, and until next time, I'm your boy Camel. Take care.